presentation contains current opinions of Moe Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Moe's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Moe.
Hello everyone, and welcome to the Compak Market Wrap YouTube update for November 20th, 2020. I am Moe Ansari, President of Compak Asset Management and host of Market Wrap. I'm going to talk a little bit about the pandemic, give you an update on that, the U.S. and international markets, and technical analysis. Let's start with the pandemic and see the tug of war that we're seeing between the vaccine and the virus. Let's talk about all of that. We do have good news. Pfizer and Moderna both have come up with vaccines, and these are the new technology, the RNA as it's called. These vaccines are basically based on new technology. There are some out there already, the Chinese, but they're based on old technologies, not the new technology. So we have these vaccines. The one is 94.5% effective. The other one is 95% effective. Today, both Pfizer and Moderna applied to the FDA to get emergency use authorization, the EUA as it's been called. You're going to hear a lot more about that, and it should be starting to roll out somewhere by the middle of December. 2 doses, takes about a month before you can, you take the first one, you wait 28 days, another one I think is a little less, but it'll take about 3 or 4 weeks for it to become effective, and so we're looking at January. But that is only about 50 million doses, and then you divide it in half because it's 2 doses per person. We have about 25 million people can be vaccinated. So it's not the vaccine now, it's the vaccinations that matter. It's the number of people we can get vaccinated, and that's going to get us to a point where we'll get to some sort of normalcy or pre-COVID normalcy. The rate is there, so we will see there's another number of other companies that are producing the vaccine, and I believe it'll be the first to the second quarter of next year before we get what is called herd immunity. By that I mean 60 to 70% of the people, at least here in the United States and Western Europe and some of the Asian countries, will have been vaccinated, and the good news that we're hearing about this one is that it does have lasting effect. I'll talk about that in a minute. But you're looking at, on the other hand, we're seeing the virus. It is exploding. We saw yesterday 187,000 cases in the United States. We're setting records on a daily basis for infections, for hospitalizations, and unfortunately, 3 to 4 weeks down the road, the death count. The mortality rate will also catch up. That is so. It's a fight between the virus and the vaccines, and it's a fight. It's basically the time that we have to get to the vaccinations. I believe we're 6 to 8 weeks away before we start the vaccinations. We start the vaccinations about 2 to 3 weeks, but then it'll be about 8 weeks before we get people, really any numbers of people to be vaccinated. So we have to fill the gap as far as the economy is concerned between here and there. That's about 8 weeks. We'll see what the politicians do. This was a map of, and I think this shows really the speed with which this virus is spreading. The dark area right here is where it was spreading dramatically last week. That was last week. Well, let me move the move 1 week forward. This is where we are this week. The real dark is worse than the red. And you can see that it has literally changed the entire, and it's starting to move towards the coast. But the coasts you can see are much lighter in color. So the infections here and here, these are people these were the first ones that got infected initially in the first wave that we saw in March and April. And these are people now that they are masking, they've gone through the process. Unfortunately, the rest of the country is catching up. These are the case loads. We have about 11.2 million people confirmed that have 11.8 million people that have been infected with the virus. We've got 250,000 people, unfortunately, that have died. So, it has a new study has found. The good news, as mentioned earlier, is once you get the vaccine or you have had the virus, you have the antibodies in your body for at least 8 months. That's all we've measured so far. So what a lot of people are saying, that these vaccines could be like the polio vaccine or the measles vaccine, that once you get it, it's good for a long period of time. It's not that like the flu vaccine where every year we have to go and get a new shot. This one could last. We don't know yet how long it's going to last, but so far looks like 8 years. So I'm going to do a webinar in a lot more detail, 2-hour webinar where we'll take a look at the vaccines, take a look at the virus, take a look at the economy. I'll take a look at the charts, the fundamentals, the valuation, and the technicals. All of that will be covered on December 2nd, 6 p.m. Pacific time. If you'd like to register, just go to the link just below this video and you can register right now. You have to be registered and you have to have an access code that we will send you that you can attend the webinar. It is free, but you have to be registered. Let's talk a little bit about the markets. This is what we've seen as far as the markets are concerned. When the recession comes, we go through what is despair. That's where everybody is losing jobs, the unemployment rates are going up, and then we get into hope, where we see, okay, and things are getting better. We went through the despair when we went down in March, then we've had hope, and now we're sort of plateaued. That's where we are now, and that usually lasts 9 months in a regular recession or a regular business cycle. Once we get past hope and everybody says, oh my God, things are good, that's when we start seeing the growth really take off to the upside, and then we get to optimism, bubble territory, and so. But I think we're in the hope phase now. We're hoping we are going to get the vaccine in the next 3 to 6 months. Hopefully, we are going to get the virus under control. We hope we are going to get growth. We hope we are going to get the earnings. That's all based on hope. But right now, that's where we are. But we're not in despair either. We're not at where we were in March and April. Unfortunately, the numbers are higher right now, the virus numbers, but we've learned how to cope with them. We've got better therapies. We've got better medicines. The casualty rate is not as high. So that is all good news. But these numbers are astronomical numbers. Pretty soon we'll be getting 200,000 people infected a day. And these are people that are getting confirmed. These are people that we know are getting tested. Then there's so many people that are asymptomatic, that just have the virus. They are contagious, but they do not know how they're not sick. So that is the other thing that we have to worry about. Here's the Fangs that we've seen, by the way. Let's talk a little bit about the markets. You take the 5 big tech companies or 6 big tech companies, and you can see that they're up 48% year to date. The S&P as a whole is up about 12%. But if you take out these Fangs, the market is only up 4% this year. So it's been the big 5 stocks that have driven this market. The other 495 are lagging. A lot of them are reopening stocks, as I call them, industrial stocks, as I call them. So if you have a broad-based portfolio, yes, you have the Fangs, but you're not only in Fangs, you're also in these stocks. So as these start to come back up and these slow down, which I think they will, we will see. Here's the market capitalization. You see in the 80s, we saw some of the largest companies were about 20%. And right before the 2000 crash, they were 18%. But right now, we're at 25%. The largest companies are controlling 25% of the S&P, top 5 companies. Now we look at the FANG returns. Looking forward, if we do get FANG only growing 5% next year, let's look at 2021. We get 5% growth, and the rest of the market grows 10%. Then I'm being conservative. Then we're looking at a 9% overall, or about 4,025 for the S&P. We get somewhere around 10% growth here, 10%, or about 20% growth here, which I would not be surprised to see them on the airlines when we start traveling again, because people have been so cooped up in their homes. They are itching to get out, and I believe that's going to happen. Same thing we're seeing here, 10% growth here. We could be at 43.50 as far as the returns go. So that's where the probability lies, that we could get somewhere between 5% growth in FANGs and 20% growth in the rest of the market. That'll give us a 17% return in the market. S&P multiples, if you look at it, 5 largest stocks right now. If you look at the rest of the 495, they're not that overvalued right now compared to the FANGs. I think FANGs are not going to come down, but what they will do is slow down, and we will see the rest of the market catch up. That's what I expect to see. If you look at, again, median stocks are down 40%, FANGs are up. They're about 40% lower valuation. That's what we're looking at there. Treasury Secretary Steve Mnuchin today came out and said he's taking back some of the relief tools that were available to the Fed. Takes about $500 billion away, but that does not happen until the end of this year. Hopefully we can see the Democrats and the Republicans in Washington get together and get a stimulus plan out now. Because if they get it out after the inauguration, we're still looking at 2 months from today. In the 2 months, we could have the vaccine. So at that point, it really doesn't matter. People need help now. Small businesses need help now. Hopefully the politicians can direct that aid to the people and the sectors that need the help and be very qualified and precise help. If we can get the money in those people's hands, I believe it'll sort of buffer us. It'll fill in the gap and we can get to the other side. Same thing, we saw the biggest decline in the market, very fast return in the market. And here's the global, when you look at the global, here's the global growth. It's been slow. So when you look at the returns, what we've seen, bear markets and the growth back, this has been one of the fastest recoveries ever in history. Let's take a look at the technicals. You can see the markets are, I'm still looking at the third wave target is much higher for the Dow. This is what we're looking at if we get an extension above this high and we can get going in the market. We've got resistance now in the S&P around 3,600. If we can get, this is the high that we made 3,650 last week, and then we have right around here is resistance. If we can get about 3,650, I think we can get to my 3,750 target by the end of the year. That's what I said at the beginning of the year. Obviously, I did not know we'd go through this in March. Nobody did at the beginning of the year, but we've seen a very nice recovery, wave 1, wave 2, wave 3, 4, and 5. That's what we're seeing. Support is right now at about the 3,400 number and then 3,139. We're looking at those numbers on the downside. On the upside, here's a weekly chart. Each one of these green and red bars is 1 week of trading. It goes back to all the way down back to 2017. And you can see if we see a third wave extension, we get to 3,750, which is my target. And then if we see an extension, we can go to 4,000. And then maybe next year, we're looking at 4,475. We'll see. There's a lot of time and there's a lot of variables right now this does not mean the market has to go up. This is my interpretation of the charts right now. Nasdaq daily, we're looking at about 12.5 as the next target. 12,000, we've been there twice and we've fallen back a little bit, but we're just going through a very quiet period. Usually with Thanksgiving holiday next week, it's going to be light trading. I don't think a lot of us are traveling like we usually do, but I think it still will be light trading where we'll sit back, look at this year. It's been a difficult year, but the markets have been good to us overall. If you did not make any knee-jerk, you did not make any emotional decisions in the market. Support again, 10.5, 9,700, and that's what we're looking at. Long-term charts, this is a weekly chart again of the Nasdaq, looking at about 12,500 as the target. Then we could see a third wave, then we could see a fourth wave pullback, and then a fifth wave rally. But first we've got to hit the third wave targets, get the fourth wave decline, then look at the fifth wave. This is weekly charts going back, looking back a few years and trying to look forward a few years from a technical perspective. The gold market, I put up a daily chart this time instead of a weekly chart. And the reason why, we're sitting in this 1850 area. That's where we are right now. If we break 1850, probably 1800, which is the next 200-day moving average, will be support. There's again this tug of war going on in the gold market. If you get more stimulus, that's bullish for gold. The stimulus talks have died down, so has the gold market. So we will see how this works out over the next few weeks as far as gold. Those are my views. Those are my observations. Those are my thoughts in the markets right now. Again, if you want to register for the 2-hour webinar where I will be more than happy to answer your questions live, anything you want to know during that webinar, that's going to be December 2nd at 6 p.m. Just go and register. Right below this video, you will see a link. Click on that and you can register. It's free and we will send you the access code, which you have to attend the webinar. Again, thank you so much for watching. This was the Compak Market Wrap YouTube update for November 20th. I will be back with you next week. Until then, good trading.
This presentation contains the current views and opinions of Moe Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compak Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indexes through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that over-focus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.